An interesting tool that you can use in order to gauge the underlying health of the economy is something called market breadth. And in this video, we're going to be discussing what it's all about and kind of find areas in the internet that you can use this information to your advantage. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new, or you get some value out of the video, hit the like button for me. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. I would definitely appreciate that. First and foremost, market breadth. What is this all about? This is an indicator that gives you an indication, like we mentioned before, of the underlying health of the economy. Now, what does that mean? So let's jump into Investopedia. Let's read the definition and then we'll break it down from there. So we see market breadth refers to how many stocks are participating in a given move in an index or on a stock exchange. An index may be rising, yet more than half the stocks in the index are falling because a small number of stocks have such large gains that they drag the whole index higher. Now, this is something that we've actually seen happen over the past couple of months, and it's something that I've been particularly bringing to limelight. We can go back to previous videos, especially when I'm saying we should be investing in names like Facebook or Microsoft or Apple, Google, these core companies, these FANG names that have kind of taken the market by storm. These are the companies that are really leading the economy and kind of holding these indexes up. Meanwhile, there's so many other companies that are lower, that are just, lagging in performance or actually in a negative decline. So this is kind of indicator number one, and we'll break it down a little bit further, but let's take a look at this example from a Reuters article that we see. Narrowing equity markets are basically being held up by only a few stocks. So we see here just 5 of the biggest US technology companies accounted for 71% of nearly 20% gains in U.S. stocks. Bank of America analysts noted performance of shares in weekly flows on some data. So what does that mean? That means that only a few, five companies are accounting for 71% of the market and 20% in gains. This doesn't sound too healthy at all. So let's go back to this Investopedia and try and break it down a little bit more. So market breadth indicators can reveal this and warn traders that most stocks are not actually performing well, even though the rising index makes it look like most stocks are doing well. So this is exactly what we're seeing today. We're seeing these 5 companies, these FANG names, hold up the index. We see the S&P has been hovering around that 47, 46. It's kind of stabilized. Meanwhile, if you take a look under the hood, you see that there is only a few companies that are basically holding this afloat. So we see here the market breadth attempts to find out how much underlying strength or weakness there is in a given stock index. By assessing the strengths and weakness, it's not plainly visible by looking at a chart or an index. If you want to go under the hood, if you want to go and find it yourself, you would go to an S&P 500 ETF. You would look at the holdings. The top 10 holdings normally make up the largest percentage, when in reality, it should be a little bit more diversified. You could see that the first 5 or 6 make up percentage points as a whole, and then as you start to go down, they make up like 0.03 or 0.3, a very small portion of the overall index. So that is definitely not a sign of a healthy economy. And basically wrapping it up, we see here a large number of advancing stocks is a sign of a bullish market and is used to confirm a broad market uptrend. So the more companies that are participating, the more companies that are up, the more companies that are successful, it means the underlying economy is good, therefore confirming that there should be a bullish mark on the index. Now, on the flip side, we have a large number of declining stocks shows sentiment is bearish, which would align with an index downtrend. So this is exactly what we're experiencing right now, in the sense that the vast majority of the market is actually on a decline. There are so many different stocks that are selling off. And it could have been a little bit of an indicator over the past couple of months because of the fact that this is a trend that's been happening for so long, but the market hasn't really budged because of the fact that these big five names were kind of keeping it afloat. So you ask me now, you sit back, you're like, I don't have the time to individually look through ETFs. I need an easy way to go and find this information. And the perfect place to start is the CNN Fear and Greed Index. It's something that I'll link down below in the description, but I've also done a video covering this topic, and they actually include like several different other indicators, and in the video that I've done we cover all of them, so you can actually add some more tools to your dual belt outside of this market breadth or stock market breadth, whatever you want to call it. So let's just jump into the CNN Fear and Greed, and we can see the stock breadth's price is what they're referring to it as. And the specific calculation that they're using is something that was created by a gentleman by the name of McClellan, and it's the McClellan volume summation. And the way that they calculate it is they measure the advancing and declining volume on the New York Stock Exchange. And what they're doing is they're taking a look to see how many companies are actually moving up and how many companies are moving down. And from there, you get an idea of what the underlying economy is saying. Because too often we look at the index, too often we look at the S&P 500, the NASDAQ, the Dow, we see, oh, it's at this number and things must be good. It's up 0.5%. But when you really dig down deep, we could really see that there's only a few companies that are doing well and the rest are performing poorly. So we can see that this stock breadth or this volume summation has really been in trouble. It's been in trouble probably dating back to July. Now, I'm not a big fan of getting in and getting out of the market. I'd prefer to buy good companies. But where this tool could be useful for somebody that trades like me in terms of buying and holding forever is looking for opportunities to add more to my position. So if I've bought a company like Visa at 220 and recently it's come off to 196 or whatever that number is, it just gives me a little bit of extra clarification to know that, hey, this is maybe a good time to add some more. Now, not foolproof or whatever. Again, it shouldn't really be used for individual stocks, but more on a macroeconomic basis to gauge which part of the economic cycle that we're in. Are we in the expansionary phase or are we pulling back? And based on the data right now, it looks like we are pulling back. So this is definitely one source that you can find this information. An additional source is a Canadian investor by the name of Larry Berman. Definitely learned a lot from him on BNN and multitude of different things that he does to get the information out to the market. He's created his own kind of fear and greed index. His is called the Pro Eyes, and it can be found, I'll link it down below in the description, but on his Berman's Call website here, and he actually looks at the McClellan Summation Index as well. But the beautiful part about his site is he takes the data and he takes it back 10 years. So you can kind of see the way that it's flown throughout the year, and we see the risk level, it's 30% right now. So meaning only 30% of the market is kind of rocking and rolling, or let's just say there's a large majority of companies that are on the decline. So it is interesting the way that he's built this out. We do see the yellow line kind of fades here, but it's down at the 30% mark as of November 25th here, and probably even lower if we fast forward by the time this video comes out. And it's interesting the way that he's put it in the term of opportunity. So at the bottom of the chart, it goes green. And he's the type of investor that buys low and sells high. I don't think he holds on to much for long, but what he does is he tries to work the market in ways that he knows how and he's comfortable with on a risk preference. So when it goes down to the green, much like it's kind of trending around that territory today, he's considering it an opportunity to buy because so many stocks have sold off. It's a good opportunity to think that we're going to be bouncing off the bottom soon and the economy is going to be expanding in some time in the future, but he's obviously built that in and he's willing to wait for that to come. So it's interesting, like I said, he's saying right now would be an opportunity to buy when the breadth is really low. And then when the breadth is expanding and so many other companies are participating in the growth, he'll start to take a little bit of risk off and he'll start to sell some of the stocks in that cautionary period. So it's definitely a super interesting tool. You can kind of use the CNN fear and greed index. And if we just quickly go back to that point, fear is where he would be buying and greed is where he would be selling. So what he's kind of changed those terms, opportunity and caution. So realistically, if you're looking to add to companies that are profitable and they've sold off just due to the panic that's being caused, maybe it's a good opportunity to buy. Maybe when we hit into that cautionary or greedy, maybe it's a time to take some money off the table and cash some checks. But for me, based on my preference, I never sell. I'm going to buy good companies that I think are going to compound over the long run. But at least, again, this gives you an underlying sense of what's going on in the economy. So let me know down below if you enjoy it. If you're still here with me, hit that like button. I would definitely appreciate that. I hope you all have a great week in the markets. Happy trading.